Hi, if you are very bullish on Ethereum, if you think that Ethereum is likely going to appreciate in value rather sooner than later, then this here is the video for you. And that's not because I agree with you, it's because I disagree with you. I am bearish on Ethereum. And the reason why you want to watch such a video is because you want to get a balanced objective view, right? You don't want to just fall victim for confirmation bias. You want to look at both sides of the coin and then make an educated decision. So I might convince you here, maybe I won't, but whatever the outcome after this video is, your perspective around the price dynamics of Ethereum might be a bit more refined afterwards. You might potentially learn something. So this is what the video here is aimed at. So over here we see a rather long-term chart of Ethereum, right? The daily chart of Ethereum measured in Tether, and since the recent all-time high, we have come down by approximately 27%. Now, what you also want to look at is Ethereum Dominance. Or in other words, how much of all of crypto is being locked up in Ethereum? How important is Ethereum in the overall crypto landscape? And that's this chart over here. So this is now measured in percentage terms. And we can see that basically in the last 2 years, Ethereum almost tripled in importance, right? So the question is this likely going to continue? Will Ethereum continue to dominate the smart contract space, or will competing layer ones actually take over some of that space? Now, there's a lot of ways to draw lines on the US dollar chart, right? One way, how I like to look at this is with parallel trend channels. So that's this one over here. We tend to go up over time, but in the very short term, we just bounced off a top. So the potential risk here is maybe something around 36% if these lines still prevail, and the potential reward is maybe 53%, something along those lines. Now there's a more objective way to look at this, right? These lines, they are very subjective. People can draw all kinds of things on charts. One might argue that maybe we've got a support over here. One might argue maybe this is a resistance line. There's all kinds of ways to draw this, and that's not necessarily very objective. But there is a pretty objective way, and that's using moving averages and using a backtest, a statistical backtest, to determine where the overall momentum is going. And I've shown this approach several times on this channel, but there's a lot of new subscribers to this place, so I will just explain this concept again. So we are adding a moving average. It simply averages out the prices that came before a certain point in time. And let's make this a bit more visible, maybe in white and a bit thicker. Now you've got a parameter here on that moving average. You can determine how long that moving average is, or in other words, how many days of price data is a point in the moving average averaging out, right? The longer the duration, the more smooth that average gets, right? So when we just increase the duration over here, you can see this white line becomes smoother and smoother, and it also gets further away from the price action. And an idea for a possible trading strategy would be to maybe be outside of the market whenever the price is below the moving average. So we avoid those crazy bear markets, right? Where we might drop easily by like 80% or so. And at the same time, we are in the market whenever the price is above the moving average. So we try to still get these nice gains of 130%. So you don't just buy and hold, you try to ride the waves. And of course, when you follow such a strategy, you're never perfect on this, right? You might miss the initial short-term rally, but that's basically the price you pay for not having to endure these very tough times. Now, the problem with this approach, again, this is kind of subjective for at least most people, not for us here on the channel. It is, what kind of duration should you take for this moving average, right? At what point in time do you start buying and selling? Should you average out, say, 100 days? Should you average out maybe 75 days? Or maybe even much less, maybe just 14 days, and you get in and out all the time? What's the best duration here? And that's where backtesting comes into play. You can actually backtest this. You can find out whenever you buy, when the price is above the moving average, and whenever you sell, when the price is below the moving average. When you do the strategy, what would have worked historically, at least, the best for Ethereum? And that's exactly what I've done. So over here, we see again a moving average. And when we are below that moving average, we are completely in cash. So in gray, we see here the portfolio line. And once we go above that moving average, we follow the price movements. So this is now simulated simply by the price at the end of the day. So when the day closes, basically. We are not looking at any price movements within the day. We're simply just checking the price at midnight UTC time. And so you can see already when we follow this strategy with this particular moving average, our portfolio line is way above buying and holding, right? Buying and holding the asset itself, Ethereum, that's in white. And over here, you already see the first result. This is the 23 simple moving average, not the exponential one, the simple one. And over here is the result of the 39-day moving average. So both of those moving averages, they work pretty well. And they mainly work because we avoid those large crashes, right? We are outside of the market whenever momentum is bearish. That's why we outperform. We don't necessarily outperform because we make more money during the bullish times, right? During the bullish times, the portfolio line pretty much increases at the same pace as the regular buy and hold strategy. So this is rather a risk mitigation strategy than a profit maximization strategy. Of course, when you mitigate risk, you maximize profit, but you're not gaining more than the average Joe when times are good. You're simply avoiding the really terrible times where Ethereum might go down, say 80 or 90%. And so this is the result of the overall backtest. So here are the durations of those moving averages. This is the return per annum, and this is the maximum drawdown from top to bottom of the portfolio line. And so you reduce the maximum drawdown and you also maximize the return per annum for the 23 and the 39-day moving average. So this is how we remove subjectivity from all of this. This is how we have objective statistical results. And there we go. These are those two moving averages. We've got the 23-day moving average and the 39-day moving average. By the way, this backtest has been done maybe half a year ago, maybe a bit more. So we already had these moving averages during the crash here in May. So just look at the earlier videos on this channel. So we exited over here, we entered over here, and I also recently exited over here. Not saying this to brag or anything, this is simply to show how useful such a tool can be. Backtesting can be very powerful. And so this is why I think currently holding Ethereum, at least for the short term, might be dangerous. So this is only discussing now raw numbers, raw data. I'm not talking about ETH 2.0. I'm not talking gas fee reduction and NFT trading activity and all those nice fundamental things. The issue with these arguments is always it's very hard to stay objective. And the idea of this channel here is to present data, to present approaches that don't have a lot of subjectivity to them. So we're trying to stay as close to the facts as possible so that we can really have a productive argument rather than just throwing opinions at each other where it's hard to come to a final conclusion. And so when we just look at this from a very cold analytical perspective, there might be potentially a better time in the future to buy more Ethereum, simply because the short-term momentum, the short-term psychology doesn't look too perfect. Now that being said, this is just one approach and it is not perfect at all, right? Look at this in the past. We did have failed signals. We did, for example, simulate to exit over here and enter again and exit again and enter again. And this also occurs trading fee, right? Depending on how you are set up. This might destroy your overall performance. So by no means is this approach perfect. By no means are you never going to make a mistake here. This is simply the best moving average that we can determine from past data. I don't think anybody will get it right all the time, but at least if we can get it right more often than not, at least if we are better than just throwing a coin, I think that's already quite a positive, because these movements, they can be very, very brutal, right? Just 2 months of movements and a 60% loss. If you can, through any kind of mechanism, at least avoid this to a certain degree, I think that's a real value add. And so that's how I currently see it. I am not bullish on Ethereum short term, at least. Long term is a whole nother discussion. I won't go into that in this video. I'd simply say if you are long term bullish on Ethereum, maybe consider to still keep some of your cash on the sidelines. Of course, this recent dip looks nice, but don't throw in all your money at once, because potentially there might be days coming where you can get even more Ethereum for your hard-earned money, right? Nobody has a crystal ball. It's simply a game of odds, of risk versus reward. And so simply let your risk allocation reflect exactly that. You can't be certain around anything. And so simply stay flexible to add or reduce risk depending on wherever the price might move. If you enjoyed this kind of perspective on the market, You're very likely also going to enjoy the premium membership of Bitcoin Strategy. You can find that at thebitcoinstrategy.com. Link is also in the video description. We've got all kinds of tutorials, for example, how to build your own backtest for whatever indicator you like. We've also got daily market updates where I describe how I currently see the crypto market. And there's a private chat where you can ask me any questions. A like on this video would be appreciated. It will help the channel grow. And of course, don't forget to subscribe. I publish videos regularly. Last but not least, there's also a public Telegram channel. You can find us simply by searching for Bitcoin Strategy channel within the Telegram app. We are around 1,500 people now. See you next time. Bye-bye.